Welcome to the Gamma Brief. It is Monday, July 27th, 6:45 a.m. Eastern. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. This brief is built on a single data set, the SPX 0 DTE options chain. All the gamma levels, dealer positioning data, put and call walls, and the GEX flip point are calculated from that chain only. Standard disclaimer, Gamma Brief is market intelligence, not financial advice. All right, let's check out the data. And before we do, don't forget to like and subscribe. ES futures are trading at 7,521. Today, if this overnight gap holds through the morning data, then dealers face immense mechanical pressure to chase the breakout. We are operating in day 3 of a negative gamma regime with a net GEX magnitude of negative $4 billion. VIX sits at 17.59 and is dropping notably overnight while ES futures are muted, indicating that event risk premium is bleeding out early. However, this overnight regime is highly vulnerable. A high impact release before the open could force massive dealer re-hedging, rewriting the regime before the bell. The expected move band anchored to the SPX prior close of 7,412 is plus or minus 82 points, setting a lower bound of 7,330 and an upper bound of 7,494. The put wall rests at 7,400, but ES futures have already breached the call wall at 7,500, meaning dealer gamma resistance has failed. ES sits 122 above put wall, negative 22 from call wall. Gap fade reprices floor to 12. Overnight, the primary driver has been de-escalation of US-Iran tensions, which pulled oil prices lower and improved the broader equity risk tone. Cross-asset signals show the 10-year yield down 2 basis points and VIX down over 5%. We are seeing sector rotation lead the way, with real estate up 1.8% and basic materials gaining 0.9%, while technology lags down 1.6%. Today's primary threat is the durable goods orders print at 8:30 a.m. Eastern. An upside surprise forces dealers to heavily buy delta to cover short calls breached by the gap, while a miss could trigger a sharp technical gap fill. The environment is consistent with defined risk directional setups to capitalize on momentum. Selling premium in this regime is selling insurance while the building is already on fire. A sustained breakdown below 7,400 put wall invalidates the bullish continuation thesis and targets the lower expected move bounds. The primary plan is already active with ES well above 7,400, shifting focus to gap continuation mechanics post-data. The data drops before the open. Let the market show its hand first. Level set. Buys defined. Good luck out there. Standard disclaimer remains. Gamma Brief and GEX log are market intelligence, not financial advice. Options are high risk. Manage your size and trade your own plan.